Hey, what's up, good people? Welcome back to Stock Up with Larry Jones, where these allergies are taking my voice away. Hey, listen, this page has been going over tremendous growth over the last month, and I just want to thank you guys ahead of time. For all of you that are new, hey, go ahead and continue to hit the like button. For those of you that are viewing this for the first time, come and join the Stock Up with Larry Jones family. We are family. We are solely interested in everyone prospering here. Okay, we don't matter. It doesn't matter what color, age, race, sex. Doesn't matter. Come join the family so we can make money. 2023 is vastly upon us. It's just a few days away, and for those of you that are just caught, stuck into quote unquote meme stock, and you have a big portion of your money, this is for you. This is truly for you. And I want you to share this with your friends and family that are in the same predicament. I know that you guys are down greatly in your portfolios. It really doesn't matter what stock you have, you're down. But in specific, these type of deals, you're new to the stock market in the last 2 years. You heard from a friend of a friend and you got in, and you tried to win. But all is not lost, because 2023 will be a year of opportunity. But now is the time to rebalance your portfolio. And yes, I kind of went over this earlier in an earlier video this year, but I want to reiterate it now that we are at the end of the year, because I know a lot of people are weary, have lost money, and you're ready to give up. And I'm telling you, now is not the time to give up. Now's the time to repurpose. As a matter of fact, for those of you that are in plays like Muln, AMC, GameStop, that type of deal, Bed Bath and Beyond, Lucid Motors, Palantir, for those of you that are in this and you're greatly down, I beg that you watch this to the end, because I want to help you shift. And it's not that difficult. I know you see us on here every day talking language and going into this and that, and you really don't understand. Some of you do understand, but you still get in overly exposed to high risk stock. And so I just want to briefly go through this again while we are at a brink of a major paradigm shift, I believe. And this is what I want you to take a look at. All right, so let's go right into it. So here, let's look at the S&P 500. S&P 500 stocks with Josh and myself. He is a YouTube friend of mine. Stocks with Josh. You definitely need to be looking at his page. Also, we both agree that the market is going to pretty much trade flat for the last few trading days. I believe it's going to be flat for the entirety of this quote unquote Christmas rally that the Fed stole. And just pretty much flat. 3,800-ish is where we will end. A little higher, a little lower. S&P 500, 38-ish. So let's keep it moving. So I want you guys to look at the S&P 500 and look at it year to date. Year to date, we're down 20%, right? 20.5%. For those of you that don't know what the S&P 500 is, S&P 500 stands for Standard & Poor, and it tracks 500 large companies on the stock market, right? I just want to keep it simple. That's what it does, okay? So now let's look at AMC. Let's just look at AMC today. So now if we look at AMC right now, we know that the CEO is, he wants a pay raise freeze, big deal. That's not going to do anything for the overall company. Traditional. I just went to see the Whitney movie. The girl did a good job, but it's just hard to find anyone as beautiful as Whitney. And I like the movie experience, but not as much as I used to. Most of you guys are streaming. You got Netflix, you got Disney Plus, and all the other streaming services. YouTube, you're watching me on. The fact of the matter is that AMC is not going to make you rich. This is what's called a short squeeze potential stock, or meme stock, right? And unfortunately, and this is not a rebuke, this is, I want to help you. Unfortunately, a lot of people just piled in, and most piled in at the top. I still have, and I'm being honest with you, I still have some AMC. And AMC, I've been in just about all of these plays except one. I've made money in them all except AMC. AMC, I made money, and then lost more money than I made. And I was fine with that because I bought AMC for a cause. I was part of what's called the ape community, and we wanted to change unfair trading practices. And I only purchased what I was willing to lose. That's it. But now, what happened was a lot of people bought in believing they were going to get rich. I came out from day one and said, I am not getting this to get rich. As a matter of fact, I know I'm probably going to lose, but I was for the cause, okay? So AMC kind of stands alone. But some of you guys got in, you got burned, and now we could see that AMC is down, and it is down greatly. Year to date, AMC is down 85%, okay? 85%. That's massive. Now, here's what I want you guys to start looking at. For those of you that are new, for those of you that are not new, this is going to be very basic for you, but this is what I want you to help the family with. When this is Google Finance. I want you guys to start using this. If you look at Google Finance and you pull up AMC, the first thing they're going to do is down here, you're going to see like stock that are similar, right? The first two or three, right? What do you see? AMC, GameStop, another meme stock, and then Bed Bath & Beyond, BBBY, another meme stock, right? And so if all of these are all of your plays, you're in big trouble because they did not perform well. And you may say, hey, Larry, the entire market did not perform well. Well, let's take a look at all of the meme stock. As you could see here, we have AMC, Neo, Muln, SoFi, Pltr. I can put Lucid Motors here, BBBY, Bed Bath & Beyond. The list goes on, right? But let's go year to date. If we go year to date, we could see that they are down massively. AMC is still down 85%. Neo, 70%. Muln is down 96.5%. And someone came to me the other day, is like, should I buy Muln? And I said, do you have any Microsoft, Apple, Google, any blue chip companies? They said, nope. And I just looked at them and shook my head. I said, you still don't get it. Quit trying to gamble. The stock market is not a place to gamble. It's not a get rich quick. It is a steady growth to build wealth if you buy in good companies. Now, when I'm saying this, when we're in another bull run, I will be the first to tell you, I will be getting into plays like this. You guys know how we do. We get in before the herd, we take our money, and we get out. And then we let the herd get stuck, bag holding. That's what we do with this. So if you bought it, this is not a rebuke to say you shouldn't have bought it. Like I said, I bought every one of them, and I made money in every one of them, and I got out of every one of them. All right, and I just accept AMC. I got my butt spanked with AMC. But we want to help you guys in 2023 for what's about to happen. Let's go back. So you see how far these are down. Now, for those of you that don't know, it's not that hard. You literally, I want you, if you have an addictive personality, I want you to simply do this. Make 75% of your investing the entire stock market or the top 500 companies in the stock market, okay? Let's look at VOO, all right, and VTI, all right? As a matter of fact, let's look at first, what are they, okay? Let's look at what are they first. Let me switch this window around. And I know this is basic for those of you that are basic, but we have a lot of new people following. So VOO is an ETF. What an ETF is just a basket of stock all in one ticker. Just think about it that way. So you can buy all of these stocks just with one sticker or ticker symbol, right? So you can just literally go and buy a share of the entire stock market or the top 500 companies. All right, so look at this. This is VOO, Vanguard's VOO. Look at this, a fund that invests in the stocks of some of the largest companies in the United States, all right? But it's the 500, all right? And so that's what the 500 of the largest companies, okay? And then VTI, look at this right here, Vanguard's total stock market ETF. So if you want to buy the entire stock market, all you have to do is buy ticker symbol VTI, all right? That is Vanguard's total stock market index. That's what the VTI stands for, all right? So just think, you can buy the entire stock market just like that. And you say, hey, Larry, I don't have that type of money to buy it. You can buy $5 worth. You can buy fractional shares of it. And I charge you to make this 75% of your portfolio. That way you can't lose. So let me show you why. Let's look at how far down it is. Both of these, VTI and VOO. Look at that. 20% and 22%. You see that? Year to date, both of these are only down on average 21%, as opposed to an average of about 85%. You see here, 96, 70, 72, 60, but 96. So let's just call it 80%. So you're down 80% with all of these meme stock, and here you're only down 20%. Okay? And then what happens is, let's go out 5 years. All right? I haven't even tried this. So 5 years, we're up, still up in the Vanguard, right? Let's go out 5 years on these. Look at that, good people. Look at that. Even in a 5-year range of all of these stock, you're still down. Look at that. You see that, right? 5 years. You're still down. You're still down massively. But VOO, and I know some of these were newer. VOO, look at this. Vanguard, you're still up 41, almost 42% over the last 5 years. And so the data is there. It is proven that, and I'm just charging you. I'm charging you. And he says, so why are you bringing this up right now, Larry? I'm bringing this up right now because I believe in the first half of 2023, the market will bottom out. We still will be in a deep recession. We're in a recession right now. I believe personally that the market will bottom out. No one knows when. But you should start buying VTI, the overall stock market, or the top 500 companies. Now you have exposure to Apple, Microsoft, Google, Meta. You have exposure to all of those. And you don't have to guess at which ones I'm going to make the money at. I just showed you that buying these great companies and just buying these ETFs is going to outperform you trying to get rich. And so don't give up right now. Don't say, hey, Larry, I'm down 80%. I put all my money into AMC. I put all my money into BBY and I'm tapping out. Now's not the time to tap out because you're tapping out at the bottom, right? And so even, I'm going to say it, I know I'm going to catch flack. Some of these plays, I can't tell you which ones. Some of these plays, the truth of the matter is you need to go ahead and rip the Band-Aid off and sell some of it and put them in. I don't care how far you down, and just put it, because some of them are not going to perform well, right? You do your own due diligence to see which ones will. And we're not getting into that. But what I'm going to challenge you, and even if you want to hold them, that's fine. That's your decision. You do your own due diligence. But what I encourage you to do is take your cup of coffee money, your $5 a day, your $10 a day, and start buying VTI, start buying VOO, and make sure that you just continue it. Don't stop. If you truly want to build wealth and take all of the guess games out of it, even if you never watch another YouTube video, if you never watch me again, you never listen to some guru, you never listen to a fund manager, anything, you will win. The facts are there. Numbers don't lie. All right, good people. So listen, I want you guys to make sure that, hey, we got a few days. Download this. If you're on your cell phone, tap the title of this and you'll see a drop down. It'll say more. You'll see the links. Go ahead and get the 21 free stock. All right. As a matter of fact, just download 100. You guys already know 100 in the Moo, and you're going to get 10 free stock. And then download Weeble and only put $1 in that, and you're going to get 12 or more free stock. All right, good people. If this has helped any one of you, let me know. Leave me a comment, but I beg you not to give up now. As a matter of fact, when we have another major leg down, which I believe is going to be at the end of Q1 after the earnings, then that's the time to actually start buying. And don't chase down these companies. Rebalance your portfolio and set yourself up to be on a path to true generational wealth. I hope this bless you. Please share this with your family and friends. And if you're not subscribed, go ahead and do so right now. Live, love, laugh, and learn. We'll see you.